Aaron Smith, Managing Director at Superfund, is a big bull on gold and joins us on the show today. Aaron, good morning to you. When are we going to hit the 1,000 mark and what happens beyond that?
Good morning, Bernie. Well, we're not sure exactly when we hit the 1,000 mark, but it could be quite soon. Actually, we think investors should be in gold for the long run, not for what it can do in the next few months, but what it can do in the next few years. Certainly in the long run, we see it going to $1,500 per ounce, even trading as high as $2,000 per ounce. It's just a matter of how fast they keep printing dollars in the United States. So our outlook for gold is very, very bullish, and I think that a few years ago, back in 2005, we started to say that gold would go to $1,000 an ounce. People thought that that was a little crazy and a little bit over bullish, but that certainly came to pass last year. And now we think it's certainly on its way north of there to 1,500.
Now I can understand speaking of gold in such glowing terms at a very, very uncertain time when you don't know where the world is headed, when you don't trust central banks, when you don't trust the ability of countries to manage their own assets. But look what is happening right now. There is a tidal wave of positive comment, positive tone about Asian currencies, about the potential for a bounce back. We've seen equity assets bounce up very nicely, and people really do seem to believe that we might be spiking up in a U-shaped recovery. It would seem like if you add all that together, Aaron, it's all the wrong time to be as reclusive as put everything into gold. You read what I'm saying?
It's a fair point, Bernie, and if you look at all the positive sentiment, the euphoria that's coming out magically out of the woodwork right now, it's amazing how well gold has really held up. So just imagine how well gold will perform when the real crisis finally does hit. We think that what we saw in 2008 is just the beginning stages of a massive deleveraging that's going to take years and years to unfold. And what we see right now is unprecedented. The mix of basically zero interest rates worldwide or throughout the West, coupled with stimulus packages and bailout plans totaling $12.8 trillion. This is something that's never been seen in history. And frankly, the short-term impact has been a bounce in equity markets, but the long-term impact surely is going to lead to inflation. And that's why investors are going to be much better off holding gold as an alternative to cash. Naturally, investors have to look at other asset classes as well to drive growth in the portfolio. Silver could be a good, cheap alternative to gold. As an alternative to equities at this point, we think that managed futures would probably be a much safer bet. So investors who allocate to gold as well as to managed futures can not only survive this financial storm, but flourish. Whereas if you keep just a standard allocation to stocks and bonds, over the past 10 years that gave you a zero return, we think the next 10 years won't be so forgiving.
Okay, we're going to continue this chat because there's a lot more to Superfund and Aaron Smith's convictions on the world than gold. Up next, we'll have more on that. Plus